Let's talk real estate. What's going on? What has been happening? What predictions are for the future, which not a lot of data is sufficient enough to predict what's going to happen because the numbers are all over the place. So, according to the Redfin Data Center, year to date, we're down about 23% in transactions due to one, lack of inventory, B, higher costs on interest rates. People just aren't able to afford homes anymore because the homes that they're in, they're locked in at 3-4%, and it's costing them way too much money to move into a bigger property, a downsize, whatever that may be. But people are staying put more and more, and I'm gonna predict that that's gonna happen a lot more for the near future because it's unaffordable. People can't go from a 3% rate to a 6% rate and still be able to afford a bigger house, smaller house, whatever it is. Their payment, since, like I said before, America runs on payments, and that balance doesn't fit on the pedestal. So I'm predicting a lot of people are going to stay put next year. This year we might finish at 30% down compared to 2021. 2019, 2018, next year we might be 40%, 45%, especially if rates are continuously staying where they are and raising even higher. Depending on what the Fed does, depending on what quantitative easing does, unless they start buying those bonds and securities back from the back end market, it's going to continue to fall. And rates are going to continue to go because the money supply is getting sucked out of the system. Banks can't lend. They're going to charge more because it's a higher risk for them. So what that means is transactions are going to be very low in the next coming few years until interest rates fall back down or until something breaks in the economy. Which comes to my next point is people are still moving though. Pricing is everything in today's market. You can't overprice. The home has to be turnkey or significantly discounted if it's not. There's still plenty of cash buyers out there. There's still plenty of people that are investing long-term holds because no matter what happens in the next 5, 6, 7 years, the real estate cycle has been 10 years, 12 years, whatever it is. Prices always go back to where they were and then peak out even higher after that. So if you're an investor thinking about long-term holds, it's still a great time to buy right now, especially if you have the means for it. As long as the numbers work on the property, you can get places that you can cash flow and keep them long term as long as you're not looking for a quick flip, which a lot of the flippers and remodelers and people that are investing in short-term rentals that were looking at numbers from 2020 and 2021 when they purchased their properties are in a world of hurt right now. And that hurt is going to make it to where there's going to be a lot of inventory coming up from those investors that overpaid. I was talking to a gentleman yesterday that has a couple properties in Arizona, and he went from charging almost $400 a night, being 80% full, to now a couple $100 a night, and he's at 25%. So people are moving towards traveling to other countries, other experiences, not just within the country anymore. And if you have a bunch of rules, a bunch of tasks for guests to do, or if your property isn't by the water, something unique, something specific, you're not just going to be able to Airbnb or VRBO a regular property anymore. And the pricing is coming down because the hotels are starting to get competitive. They're starting to get discounted because they want the business as well. So let's talk a little bit about where people are moving and how pricing is affecting different regions. So if you look at Florida right now, where I'm also licensed Southeast Florida, so if you need any help there, please reach out. Would love to help. My team and I would love to bring some value to you down there as well. People are still moving. Like the fastest sales growth rate, according to Redfin right now, out of the 10 cities that they have on the list, 8 of them are in Florida. Naples, Palm Bay, Miami, West Palm Beach, Boca, Fort Lauderdale, Boynton Beach, and then you have El Paso, and then Myrtle Beach, South Carolina. So these prices are still in the 20% of raises because the outflows of people moving from more expensive markets are moving to those markets and continuously keeping the inventory down. So the prices are staying up and they keep going up. They are starting to level out a little bit. You're not getting 100 offers all cash, giving up a couple grandkids, a couple kids in the deal. But it is starting to change a little bit. But stuff is still moving. As long as it's priced correctly and it looks good, turnkey, it's selling pretty quick. The Minnesota market is getting a little harder than the Florida market, obviously, because we just don't have a lot of movement in Minnesota, and that makes it tougher because we don't have the huge inflow of people coming in, purchasing things along those sorts. We do have a lot of corporations, but even with the budget cuts and everything else, the corporations aren't moving a lot of people over here. Lots of people are moving out. Rent prices are starting to come down. Tenants are becoming a lot more weary of where they're living, what they want, what features, options, just because there's a lot of new apartments and apartment buildings, and those developers are giving out great rates, great amenities, and people like that over a duplex, a townhome, even some single family homes that are, similarly priced, depending on what their family dynamic is, obviously. So what that states is that, rents are going to come down since they did shoot up through the roof in the past couple of years when people were, not being able to purchase properties. The market predictions that I see for the next few months, at least, is, right now is the time to shine for people that are purchasing through down payment assistance programs, FHA, VA. Those rates are a little better because they are government-backed programs, and there's not a lot of competition out there, so you're not competing with a lot of cash, you're not competing with conventional financing, and most time we're getting these deals done at or below asking price, and we're also getting some seller concessions. So that is the time to shine. If you don't want to be a renter, if you're ready to move on to that next step of life, if you have the funds, if you understand the expenses, if you understand the extra costs that go into home ownership, now is your time to shine, because it's not always going to be like this. The market always changes, the market always shifts, and right now we're just at this point. So moving forward, if you have any questions, concerns, want to have a simple conversation regarding Minnesota or Southeast Florida, please reach out. Happy to help, have a conversation. Otherwise, have an amazing day.